The following is a presentation of TFNN. Live at TFNN, the Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, the Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the October 2nd, terrific Thursday edition of the Money Masters Show. I'm your host, Steve Rhodes, author of Mastering Probability, the daily newsletter service that is the intelligence for creating financial freedom. Hope everyone out there is off to a great start of their day. Let's make sure that you and I, that we do all that we can do to have a terrific Thursday. And we should always remember that the way that we do anything is the way that we do everything. So during the next hour, I'll do things the way that I do everything. I'll be as diligent as I can. I will be the best that I've got as I do each and every moment. And we'll do that by looking at extraordinary tools that help us identify where price is headed to. We'll utilize that A to B equals CD tool. We'll utilize Fibonacci expansions and retracements. We'll look at Japanese candlestick charting. We'll look at Rhodes, momentum trading signals, TAS market profiles, Chapman waves, the whole arsenal of tools that we've got here at TFNN. And remember, this is an interactive show. That means we'd love to hear from you. We absolutely love to hear from you. Just pick up that phone, dial on in, 877-927-6648. Lines are free right now. Internationally, you can reach out to us at 727-445-1044. Then together, you and I, we can go hunting for bulls and bears. It is terrific Thursday. This is TFNN. I'm Steve Rhodes, and welcome to the show. Right now, Dow is off about 13 points out here. S&P is flat. She's trading 1945. Composite down 3, trading at 44 and a quarter. Russell 2000 up 4, trading at 1089. DAX is up 86. FTSE's down 50. You've got Goldilocks back $3, trading at 12.12. Silver off 21 pennies at 17.04. Platinum down $12. Light sweet crude off 89 cents out here. To the upside, we've got Tesla. Tesla up $8 and change. Lithium Motors up $7 and change. Netflix up 5. Mylan Inc. up $3.60. Asbury Automotive up $3 out here. McKesson Corp up $3. Wynn Resorts up a couple of dollars. Global Payments up $2.60. To the downside, it's GoPro in the charge, leading the charge dollar-wise, off 8%, down $7. Cree, CREE, we're going to go take a look at that. That's off 14%, down $5 and change. EMES, Emerge Energy Services, down $4. Amazon off $3.60. Concho Resources down $3.40. Pioneer Natural Resources off $3.36. U.S. Silk Holdings down $2.85. Cheniere down $2.65 out there. Again, our call number 877-927-6648, and congratulations to all those wonderful winners that are playing along with us in our TFNN virtual trading competition out here. On the last hour, we had our first daily winner. That was Ramiro Diaz. He has been playing the virtual trading. He did it last year, played the virtual trading competition. Today, he went home with $100 and his copy of The Art of Timing the Trade, your ultimate trading mastery system out there. What a great book to have in your arsenal. Winners that we had yesterday lead the charge here. We've got a little horse race going on. All people started with 25 grand in their account, and we've got S. Nijar. He's up to 41,000 in profit. That's right, 41,000 in profit, trading the set it and forget it, the Ron Popeil system of trading out there, the Nadex platform. That is a beautiful thing. In second place, we got C. Norwood up at the 31,000 profit level. H. Yip up 21 grand. G. Ziegler up 20 grand. J. Cremian, 15,000. I think I may have mispronounced that. J. Skoronsky up 15. A. Pierce up 12 grand. Arfady up 11, almost 12 grand. K. Kozlov up 10, and A. Klein up 8,000. So congratulations to each of those and all of you out there that are playing along, that are trading and getting a great education out here. And look forward to seeing what tomorrow's festivities. So I'm pulling for a nice market out here, a nice volatile market. It makes it a little bit easier for trading the Nadex platform. So let's begin by taking a look at what's going on inside of the markets. Markets are flat basically at this stage. So let's go take a look at some equities here that are moving around here. You've got, let's take a look at Cree first. Cree down 13%. Looks like they missed their target out here. They They cut their outlook. Let's go see but Cree's had some other problems here. If we take a look at a trading session specifically on August the 13th after a earnings date out here, that was an earnings date, so that was today's not an earnings date. They just simply have cut their forecast. After that earnings date, that must not have looked pretty good because it was down with 11 million shares on the August 13th time frame. They released their earnings probably after the bell on August the 12th out here. So that was the first sign of institutional selling. Maybe not the first sign. Let me pull this back further. No, not the first sign at all. This thing has had institutional selling for a long time. Talk about that signature out here. As I take a look at CREE, there was some major institutional selling back a year ago, August 14th, 2013, when it moved down with volume of about 22 million shares. Then what's it do? It gets back up to the level where it broke down from, got all the way back up. That must have made everybody feel happy. Never really closed that window, just tested that window back on October 22nd, October 2013, and then boom, the next sign of institutional selling, October 23rd, 15 million shares on the way down. We saw some additional institutional selling with a gap down on April 23rd. We saw it again out here on August 13th and today. So now, where's Cree headed to? Excellent question. Let's put this back on let's first take a look at a monthly chart for this equity and see what the fall from. Well, this is not the first time that this equity has fallen from grace. Well, let's take this back here. So it makes a big, nice double top out here. The double top in from the 2010 time frame. It's now below a monthly market profile. The volume that you have inside of Cree takes you really back to September of 2011. You're trading just into it as we speak right now. Now, we just began the month out here. Again, September 2011, the top of which is 34.42. You're 33.95. That says that it ought to go down. Cree ought to come all the way back down, make a 100% move. Again, it's a monthly chart we're looking at, down around the price level of $20.25 out there, CREE. So they may make some really nice LED light bulbs, but there's no light that I can see at the end of this tunnel here in CREE. Again, that's a monthly chart. Probably not fair to do that. Let's take a look at the weekly chart out here. And okay, so Cree, we put this on a weekly chart. Small A to B equals CD. The downside says you got 29.87. So CREE, right now it's pulled back into the last sign of strength on this equity. That took place the week of January 21st, 2013. 23 million shares were traded there. So we're just into Wednesday. You're at 9 million shares right now. Cree, if it's going to have a chance of holding support, I'd look at the week ended probably about January the 7th, and the price level there, 31.22. If it breaks that level, then I have to say the larger fruition, that monthly chart that we're looking at, that likely comes into play out here. So Cree right now is pulling back into a breakout area. If ever there was a place for it to be able to find support, that could be it. But what you'd like to see is price hold about this level right now, volume not continue to increase, and then see it go back and test that area with lighter volume. Also moving in the markets here this morning, we got the Emerge popping up to the first place right now. You got Emerge Energy Services out here. EMES is the ticker symbol. It, too, this week, breaking a market profile whole support level, and that was at 110.03. You're trading at 104.96 as we speak right now. So where is Emerge Energy Services likely headed to? Well, let's take a look here, see if this thing has broken its trend. Well, yeah, it's broken its trend, so it's done that. Let's see, where's the volume bar? It's trading inside this trading session from June 16th. Let me put this on a daily basis. We can come back to the weekly. Let's put this on a daily chart and see what pops out at us here inside of EMES. Right now trading at 103.68 out here. Well, this pops out. And is trading right into it. And this is now a gap down with some pretty major volume for this equity, 3.5 million shares on June 20th. But that level held. So that's an area you'd have to say the price point area to be watching inside this equity is going to be 95.16. If it breaks 95.16 out here, and there's no reason to indicate that it shouldn't, but let's watch to see what happens inside this cluster of trading candles out here, meaning June 20th through the June 25th out here of 2014. If it breaks that level, let's just take a look at just normal retracements now. Let's just come from the low back here in February, February 2014. You're below the point 382 just barely, and that says 8179 would likely be the next target. And that is for ticker symbol EMES. The emergency lights are flashing for Emerge Energy Systems out here. Let's take a look at Pioneer Natural Resources, PXD. Let's go see what it is doing. That's off $5 as we speak right now. Again, we're looking at a daily chart out here. This has taken out a B point. The swing would have been August the 14th. That had 2.8 million shares. It was taken out with 1.6. No, that didn't do it, but 1.7 on September 22nd out here. 1.4, 2.1. So the swing point has not been taken out with volume. Even yesterday's volume was only 2.1 out there. So that's kind of interesting. So, but let's take a look at, nonetheless, let's take a look at the A to B equals CD down pattern inside of Pioneer Natural Resource. Your A point out here is going to be July 24th side. Your B point is August the 14th. Your C point is going to be August 26th. So, uno to uno, 1-to-1, A to B equals CD to the downside. That's going to get you into the 177.90 area for this equity out here. I don't know why that disappeared. So strange. It is getting towards an overbought level. We put the A to B equals CD pattern back in here. I must not have done something right out there. There we go. So that's at the 35.21 mark. 35.21 is also going to bring you back into this little high volume trading session out here from February the 11th. But the right place, the right potential buy inside Pioneer Natural Resources. It has this little open gap out here. The real sign of strength inside of this equity took place on August 1st, 2013, when it gapped up with 4 million shares out there. And that gap has not been tested, has not been filled. Again, the terminology, gaps getting filled, it just means price coming back to a breakout area, or in this case, if it's a gap, that's of the gap up. A gap down, it's just simply price coming back to a breakdown area out there. So you want to learn to buy breakouts, you want to learn to sell breakdowns. And that's where gaps really are your friend out here. Now, in this case here, price moved down into that gap. It did it back here with a nice big old key reversal session back on January the 14th, and then it just simply went topside up to the 234 level. That's when it was trading down around the 163-ish mark out here. But at this stage, I'd have to say, in lieu of any kind of sign of strength or anything inside this equity, it's most likely coming into the 44.79. I'm sorry, the 168.32 to 177.90 level. Ticker symbol there is PXD. Let's go take a look at what's going on inside some of the sectors inside of the S&P 500. Let's do that. Let's take a look at the XLK. It's off only 4 cents. So we get back first break. We'll go take a look at it. We'll go see what it did yesterday, where it's likely to head to. Again, you can give us a call at 877-927-6648. This is Steve Rhodes. This is TFNN. We'll be right back, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Andy Hecht's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Flat market out here. Dow's off 10. S&P is off 70 cents. Composite up 35. Russell 2000 up a couple of bucks out here. Had a question to take a look at GoPro for Dawn inside of our Tiger's Den out there. So let's go take a look at ticker symbol GPRO. And the question is GoPro a buy here? Now, GoPro went IPO, recent IPO, beautiful-looking IPO. That took place on June 26th. Has not really looked back since. That low of that trading session was $28.65. It's trading at $84 right now. So it's been a bit of a rocket ship on the way up. So we don't have a ton of data out here. So let's use the best tools that we do have available to us. So let's first take a look at this. Let's take a look at volume as one of our tools. Let me get rid of that. Come on, delete this. Delete. There. Come on, do that for me. There we go. Okay. So let's first take a look at volume and see where the volume is hiding inside of GoPro. Now, what sticks out for us each is that on September 29th, there was 27 million shares to the upside, even more volume at its highs, 31 million, September 30th. So what that tells us, Dawn, is that at some point in time, GoPro will or should go test that September 30th high. When you make a high on a daily chart, that's really all that we've got inside of GoPro. When you make a high with volume, markets typically do not end. They end with volume off the highs, and we don't really have that. If we take take a look at the last 2 days trading sessions. October 1st, you pulled back with 12 million shares, so that was yesterday. No big deal considering you were up with 26 million shares, just a little bit of profit taking out there, and no price damage. Today, gap's down just a bit, 7 million shares, so volume is picking up because we've only been trading for an hour. So if volume is picking up to the downside, would this be the place that you would go ahead and place a trade? I would say no. That would be my first answer. You want to go back and say, hey, where's the real breakout session here? Now, not a lot of data, but one could make the case. I'm just looking at these high volume bars. I'm going back to where I see the least amount of volume. That's really where price broke out from. And that would be the price day from September 22nd out there. Only 4 million shares. You see, on September 22nd, 4 million the next day, 8 million the next day, 12, the next day, 14, the next day, 13, 26, 31. See how volume just kind of moved up there? So the real breakout area inside of GoPro would be for it to pull back into that September 22nd area. Interestingly enough, the low of that session was 66.50, and the TAS market profile low, which is a profile that's been around longer than the one that just formed today, is right around that same price level. Then if we go take a look at retracements, and I'm going to take a look at retracement here. I'm not going to go to the all-time, to the IPO day. I'm just going to come back here to where it formed a little bit of a base on August the 8th out here to this high from a couple days ago. Your 0.618 retracement level is 59.86. So first place for GoPro to move down to. Not saying that it's going to get there. It's just not a ton of information, Don. Likely, you're going to see a pull back to 73.83. Now, what I see out here at 73.83 is I see a small little gap between the high of September 23rd, which was 73.42, and the low of the next session, which was 73.85. So you get a small little gap out there. That's a little window. That could be the area. If it's pulling back on light volume, the market decides that it's going to form a bottom and turn around. That could be an area where you would look. So I don't know whether you're looking to scale into something, whether you're looking at it from a longer-term standpoint out here. But those would be the areas where I would be watching for GoPro based on the way it's trading at the moment. The volume pattern of 7 million shares in the first hour of trading, that starts to get a little tricky. It's a bit too much volume because, you got 6 hours of trading, right? Straight line math says you could be doing 40 million shares if volume were to pick up. Well, that's not a good sign if you make a high with 31 million and you pull back with more than that. So watch how today trades. It probably gives you a bit of a clue out there, and see if the volume starts to dissipate. So I hope that helps Dawn and anybody else that is taking a look at ticker symbol GPRO. That is GoPro out there. Right now, let's go take a look at some other equities here that are moving and grooving. Let's take a look at Tesla. Tesla is up 3% this morning, up $8 and change, gapping up, not creating any kind of an island or anything out here. But if we take a look at Tesla, see what it has done, see where this is pulled back into. What stopped this? Tesla formed a bit of a little hammer candle yesterday, so that's bullish, and gapping up today. That, too, is bullish. Again, ticker symbol here, TSLA. So you've got some bulls in place trying to defend their territory. Now, you've got a little bit of a supply line that took place on September 15th. It got walloped to the downside here. That was with volume to the downside of 16 million shares. So during the break, we'll go take a look at that Tesla. I'll come back. I'll have a full report for you. This is Steve Rhodes. This is TFNN. Get your trades in, folks. I want one of you. I'm speaking right to you. You're going to be one of the winners out there in today's TFNN virtual trading competition. We'll be right back.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's off 35 right now. S&P down 5. Composite down 16. Russell down 60 cents right now. We were taking a look at, or I was taking a look at Tesla for you. TSLA is the ticker symbol here. I'll put this on the weekly chart for you first if you're watching this on Tiger TV. And you're going to see the nice rising price channel inside of Tesla that has formed out here. And so Tesla's still in a confirmed uptrend out here. Price on its pullback here this week has not come back and tested the bottom of that price channel. So I suspect that it, even though today we saw a little bit of a gap up out here, I would suspect that Tesla would. Now that gets you down into about the 230 area. Doesn't have to come back and test it, but that would be your ideal spot as far as taking a look at determining whether Tesla is going to continue its trend. Now, if it breaks this this rising price channel out here, if it breaks through it, means it moves to the downside, comes back and tests it and tries to get back in the party, and they close the doors and they don't let them back in the party, then the confirmed uptrend in Tesla would have changed out here. And that then says, as you take a look at daily charts out here, that then all of a sudden starts to bring in things like the swing point from the weekend of May 5th, 2014, the swing or the candle session from January 13th of 2014 as well. But as we speak right now, Tesla still in a confirmed uptrend out here. Now, when we began was probably the first hour, we were taking a look at a 120-minute time frame chart here for the Dow, and we're looking at the Dow futures. And what we were paying attention to was this little hammer candle that had formed at 6 a.m. That hammer candle is under attack again. It's been under attack. It was during the 10 a.m. time frame. This next bar here for me for 2 hours doesn't end until 12 noon, so not until Basil's show is over. But it closed below that on a 2-hour time frame. That is the area where bulls are trying to defend their territory. And that's at a price level of 16,694. You're trading at about 16,681 right now. It closed below that. That says lower prices. You break below a hammer candle. If you're long, you're wrong. The real hammer candle, again, for us to really be focused on is going to be the one inside of the Russell 2000, inside of the IWM. As we switch over there and we take a look at that, and that's because you got the IWM at the bottom of a consolidation, which it hit with too much volume yesterday. The hammer candle low did get tested, did hold, and that was from the trading session of May 15th, and that was out at 107.44. You're trading at 107.53 right now. You close below that, you do it with any kind of conviction, then that sets up a 13-point move to the downside. So watching the IWM is, I think, perhaps one of the keys, one of the more critical areas for us to focus on and pay attention as far as the market giving us any kind of a signal. Let's go out to Chicago to Robert. Robert, thanks for calling. Thanks for holding. How are you doing this morning?
Oh, good, Steve. How are you?
I'm doing excellent. Thanks so much for asking. Did you want to go shopping at Whole Foods Marketplace today?
I shop at Whole Foods all the time. I love it. It's good. But I'm wondering here, is it forming are we kind of bottoming out here? Is this an opportunity?
Inside of Whole Foods specifically?
Yeah, I was thinking about 36 down here. Will I get a chance around 37? And my play would be go long for a longer, 3, 4, 5 months, maybe towards 56.
Well, let's see what it's. Yeah, let's see what it's doing on a longer-term time frame out there. Now, what's your favorite spot in your favorite thing to get at Whole Foods? Anything specific?
I love the coffee. They have a coffee called Allegro, and it beats the pants off of Starbucks. I know you guys are Starbucks fans.
Okay. Oh, that's cool.
I got a number 2. Try their bread. I mean, their bread. They have their every bakery they have great bread.
Yeah. Well, I know that in most Starbucks, next to that bakery is a wheatgrass machine. See, you got to give that a try. That's how you get all your good nutrients inside your system.
Oh, okay. Wait, at Starbucks, there's a wheatgrass machine?
No, not Starbucks. At Whole Foods Marketplace.
Oh, yeah, there is. Yeah.
No, Starbucks. They let you just walk on the grass when you come in there. They're not interested in that. Well, let's look at the Whole Foods market, because it's had quite a few problems when we take a look at the stock chart. When I take a look at the weekly chart out here, the only bullish thing that we can see at this stage inside of Whole Foods marketplace is the fact that so far the market profile low has held, and that's priced out at 36.76 out here. But what you've got is just an absolute huge supply line from the week ended May 5th out there. And it looks like that was a result of a earnings date, not the one previous, but the one prior to that, so May 15th of 2014. And it really, maybe it's forming a bottom here. If you were going to take a trade on it, you want to try to get it priced down as close to the 36.76 level. And then you'd really want to put a tight stop on it. And you wouldn't want it to close below something like 36.08 or something like that. So you don't have to risk a whole lot. This could get away from you. That's your risk, is that, it would gap down below a stop out here. But as I take a look at the weekly chart, which is what I've got up on my screen, It says to absolutely be cautious. Now, the thing that you want to do is you want to take a look at this from a longer-term standpoint. And what you really need to see inside this equity is you need to see it close above the 40.17-ish mark. That would be positive. That would suggest that you are beginning to see a change in trend. But what I would also do, Robert, is I would draw a trend line. If you do trade this, I would draw just a trend line and understand that would be a natural area of resistance as well. And that trend line, I would just use the top of the candle session from October 28th, 2013. And then I would use the top of March 24th, 2013. And so, which is not going to be too much higher than that 40.17 mark. So your best trade setup, in my opinion, is that 36.76 area. Watch what happens at 40.17, or wait for some kind of sign of strength, and then buy the first retracement there, because you got a lot of agitation, you got a lot of overhead resistance inside of Whole Foods. Great place to shop for sure. Great place to spend money, but there may be better stock charts for you to look at.
Wonderful. Thanks so much, Steve.
Hey, you bet. Thanks so much for calling. That was Robert in Chicago, and here's an equity, folks, where the volume, this gap down that it had after its earnings, or maybe it was a lack of earnings. I don't know what took place, and we don't really need to know what took place on the trading session of May 7th, because from a technical standpoint, we don't know what the news was. We just know that the traders, which are the most fundamental most fundamental element of any company, it's what are the traders doing with the stock, right? It has nothing to do with how good a company is, how good the products are, how much we enjoy them. It's really what are the overall traders doing with the company. And at that stage, the traders were certainly unloading. So, so that's how you really got to trade this. At any point in time, here's a question though: has this had any kind of sign of strength off of the bottom? And the answer is it had a small sign of strength. Has had two of them since those lows were made. The first one was back here on July 30th. There were 21 million shares to the upside, but then the next day it traded lower with 24 million shares, held support on that market profile in that 3630-ish type area. So that weekly profile low is a pretty important one for this to hold out here. And that was on the Whole Foods marketplace out there. And yeah, folks, go to their wheatgrass right next to the bakery. Go to the wheatgrass. Go to the juicing area, and try on a shot of wheatgrass. Single shot of wheatgrass. Have mix up a single shot of wheatgrass, a single shot of ginger, because that'll go ahead and light you up on fire out there, and take that in. That's got 98% of every nutrient that you could possibly want. That's how you get great vitamins into your body out there. And now what you might want to have is what I do, because I've been doing wheatgrass shots for so long that then my skin's not green. And I hate the flavor of it. But I know how good it is. It's about taking your vitamins, right? And taking vitamins are good for you, right? Take vitamins. Who knows what kind of factor? Who knows what went on with in the vitamin world? But in any event, I just go over. They've got this peanut butter machine. Just go get a small amount of peanut butter, and just down it with some almond butter, peanut butter, what have you, to chase it down. That'll eliminate the flavor right away. Now, there's a lot of folks that like the flavor of wheatgrass, and if you do, God bless you. But it's still so good for you that I certainly recommend that you go ahead and give it a shot. All right, so right now let's come back to the markets out here. You don't want to hear about wheatgrass. You got the Dow trading down 54. That hammer candle under attack inside of the Dow futures. Russell down a couple points, trading out at the 1083 mark. Let's go take a look at the levels on the Russell and the IWM are tipped for their consolidation are going to be typically just a little bit different out here. So let's go take a look here and see on the consolidation. The reason is because inside the IWM you're accounting for dividends. Inside the index, you're not. So the reason why when we take a look at swing points inside, for example, the SPY, the Qs, the diamonds out here, the swing points are, as prices being hit, it's going to be different than taking a look at the actual index out here. Now let's take a look at the index, and here's the hammer candle. It's clearly visible inside the Russell 2000. So from an index standpoint, the low of that hammer candle session is May 15th. That low has not been hit just yet, and that low is at 1082.53. Actually, yesterday it got down to 1082.99. So, you want to be able to put this all together out here. And if we take a look at it, it's the break below that hammer that will be the key level, 1082.53. You get a close below that, this is a 130-point consolidation, and that would suggest, unless price gets back into that consolidation, which would say it was a false break to the downside, you have to go with the information you've got. A break of that says that it's not a false break until you see otherwise, and says you got 130 points to the south inside of the Russell 2000. Now, as we take a look at the Russell 2000, we take a look at it on a daily basis, we can see that it's also in the extreme oversold condition. In fact, we have not seen the Russell 2000 in its 14-day relative strength indicator get down to this 2845 level, below 30, in I don't know how long. Well, I can tell you, the last time that it got down into that area was November 16, 2012, where the market formed one heck of a nice bottom out there, a huge bottom in the marketplace. So that's the last time that we saw the Russell 2000 get down into that level. In fact, if I go let's take a look at some horizontal levels of support and resistance out here. Let's take a look at the Dow. So I'm going to pull the Dow up on my screen, and if we take a look, this is a daily chart for the Dow. Now you're going to see a number of different horizontal lines going across my screen out here. Those horizontal lines are primary trading ranges. Let me do this. I'll do this one at a time. I'm going to change the time frame here. I'm going to remove some of the. I'm going to move the weekly, which are in yellow. I'm going to remove the daily. I'm going to move the daily trend lines out here. And I'm going to go put this on a monthly chart out here. So let's put the monthly chart for the Dow. You can see the nice rising price channel. And the red lines that you see going across my screen, those are the PTRs. Those are the primary trading range boundary lines. Now, the red solid lines are the actual primary trading ranges. The dashed lines, those are the midpoint PTRs out there, the midpoint. And since we've got a caller that's calling in from Thailand, we'll come back to this. Let me just state this, that what the Dow has done on the monthly chart, it's run into resistance at the 17,005 level. The pullback on the Dow, if we do see a significant pullback at 16,070, right around there, that should be really good support inside of the Dow. Now, that is down another 950 points or so to the downside out there, but on a monthly basis, that's what the Dow is doing. And our PTRs are going to be different on a weekly and different on a daily, the way that Steve-O uses the system. So let's go to Mike in Thailand. Mike, thanks for calling. Thanks for holding. How are you doing this morning? Oh, he's not on the phone. How about that? He's not on the phone. Well, shoot. Sorry about that. I thought we had Mike on the telephone. So his question was, what's the ETFs on the social networks? I don't know what the ETFs are for the social networks. Mike, maybe somebody in the den can post that into the screen for me, and we'll try to figure that out. But let me just come back to the PTRs, and also had a question about the XLF. So we'll come take a look at it. Yeah, it's thank you, Z, our man Z, and then he knows everything, SOCL. And we'll take a look at that. But I want to come back to these primary trading range boundary lines. So on the monthly chart, I'm going to switch back now to the weekly time frame. And what we're doing here is we're identifying the largest number of opens and closes, what Steve likes to say, co-located opens and closes. Doesn't matter whether it's an open or a close out here. And what I'm going to do is I'm going to go ahead and put our weekly lines out here on the screen. At least I'm going to try to. Come on, baby. Why, there we go. I don't want the, I put the daily. I meant to put the weekly out here. Give me a moment to get up here, get the weekly on the charts out here. So when I get back from the break, we'll go ahead, we'll take a look at this, and I'll also go take a look at SOCL during the break and the financial sector, the XLF, and we'll see what they're doing. This is Steve Rhodes. This is TFNN. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow off 62, S&P down 8, Composite up 23, Russell 2000 down 1 point right now. Let's take a look at SOCL. for Mike in Thailand. If we take a look at it, it's trading right now at 18.59. I imagine the question was, where is this headed to? The last level of support that we've got out here is where it's trading into, and that was this trading session, this little, looks like key reversal, bull sash type candle that took place on July 18th. And the volume there, and that's a swing point as well. The volume there, Mike, at 163,000 shares. You're trading into it yesterday with 311,000, so you're coming into a swing point with volume out there. That low needs to be tested, likely will be tested. That's at a price level of 18.36. Of course, to trade any of these ETFs, and I don't know what the top 10 holdings are inside here, you really are better off going and taking a look at the top 10 holdings. I'm assuming there's more than 10 instruments in here, but the top X number of holdings will usually represent more than 50% of the weighting structure, and that's how you get a real good feel as to what's going on. If that level fails, meaning you see price close below 18.42 out here, then the next B line, the only swing point that it's got to focus on, you could make a case, maybe, just maybe, the 1750-ish area, but more likely the May 7th routine. If we take a look at retracements from low to high out here, what we'll see is that this is trading now below the 0.382 retracement. So naturally, that would say 1790 would likely be the area where this thing would target. If we take a look at the XLF, if we go, I mentioned we're looking at the Dow out here. If I go take a look at the XLF, and I take a look at a weekly time frame. Now, I've got the weekly primary trading range boundary lines up here, and 22.17. We can see the XLF is right now just trading below its market profile. We've got obviously 1 day left in the week out here. 22.98 is that number. You break below that, it certainly says don't be long. And where we ought to see good support inside of the XLF is right around the 22.17 area. That's where we've seen about 8 points of contact on its move up here recently, and so that becomes a pretty good level of support, and that is for the financial sector. If I just switch this over to the daily just to see what's going on volume-wise, let's take a look at what took place yesterday as the market was careening lower out here. We saw the XLF move lower with volume of about, well, I tell you what it is. I can put it on my screen out here. There we go. The volume yesterday was 51 million shares. That push on Friday was, or Thursday, last Thursday was 54 million shares out here. Again, really below a base that has been built out here. The retracements, just look at that as a natural level of where price would gravitate to. 22.77 is the next test for the XLF. If it fails at that level, 22.47 becomes your 0.786 retracement. But in reality, you start getting so darn close to your swing point from back in August that really becomes the target level. August 5th, August 6th, August 7th, August the 8th out there. That's if it breaks through 22.77. Volume characteristic as we speak right now, 10 million shares today. Yesterday did 51 million shares, so we've been trading for an hour and a half. Volume seems to be right now pretty much on par with yesterday. So, folks, it is Terrific Thursday. That means we've got a great lineup for you. Our man Basil Chapman, he'll be up next. Following Basil, we got Larry Pesavento, Daryl Martin, David White, Tom O'Brien from 3 to 5, and the Andy Heck Show from 5 to 6. Get out there, place your Nadex trades. There's 4 more daily winners that we've got out there. Congratulations to all that are playing along with our TFNN virtual trading competition. It is Terrific Thursday. Make sure you have a great one, and I'll look forward to seeing you bright and early tomorrow morning. Take care, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.